Well, ladies and gentlemen, welcome to the 24th episode of the Futurum Equity Podcast, the Kobe episode, the Black Mamba. This is a monumental one for us now as well because we are exclusive on YouTube. This is going to be going forward YouTube live, and the only way you can see on X, I guess, is going to be post-production over the weekend. But yeah, welcome. And Daniel, how are you doing this morning?
I'm doing good. And listen, the big question of the day is how many of your trolls are going to follow you over to YouTube? Are they going to make the effort to leave X and come over and tell you how your 300 to 400% returns are not adequate and that your investment ideas are poor? Because that's really how are we going to get an audience if we don't get at least 48% trolls?
Well, yeah, speaking about disapproval right now, I'm kidding. But listen, I welcome the trolls. Luckily, as Daniel, as a former college athlete himself, like we got thick skin. I really don't believe you can be in this game if you don't, especially when the trolls don't really have an identity or a face. They hide behind something that just is non-existent. So I welcome him. And I think they're getting a bit exhausting. There's a lot of fatigue on the trolls because every time they think it's their time to shine, they get soberly reminded that the cycle is still pretty early. And today is another example of that. But
Corey was up 21% today.
I was just going to say, like, the data center thing seems to be back today, but we'll get into that later because first I want to talk about something pretty big that happened to Daniel, which is monumental because there's only I'll let you continue from here. Go on what happened.
Yeah, look, it's I'm not great at calling my own number, but if you think out there, like who is the most probably prolific person that could share your content if you wanted people to see you? You get Taylor Swift. I'm trying to think who's the biggest. Bieber's fallen off a bit. But we spent, 6 weeks doing a deep review on a fusion project for the Trump Technology Group. And this morning, I went on Fox Business and I was talking about the merger of DJT. That's the TAE, the nuclear fusion company that's now part of Trump Media Technology Group. And President Trump liked my segment so much, apparently, that he decided to share to truth it. And so, I got to say, I got that sent to me and I opened it up and I'm like, holy smokes. I was genuinely starstruck. Yesterday, Donald Trump Jr. shared a post of mine about it. But this is the big man. Policy and politics aside, I don't really care where you sit. The sitting president of the United States
huge
was sharing my video. Dang. Woo.
Well, listen, I already know Matthew thinks you're a superstar, but did you let him know what happened this morning? Like, hey, the president of the United States, just tweeted at your old pops.
Not yet, because he's at school, but when he gets home, I'm going to talk to him about it. So
that's going to be pretty cool.
Yeah. The bigger thing though, too, is like, if I can say about this deal, maybe a good starting point, but like, I know people want to politicize everything. And when you have a president that's, has the sort of ability to, drive the press and media and the conversation the way President Trump does, but like us winning the energy race is something that every American should be behind. Every American should want fusion to work, clean, abundant, affordable energy. This guarantees our leadership in AI. This guarantees, our strength in manufacturing and industry. Like, this is one of those things. It's like, it's as apolitical as it comes. And by the way, the company they acquired, it's like 5 Nobel laureates, 8 Maxwell winners. These are not political people. These are people that want to bring fusion to the market. And this is a really cool company. I spent a lot of time. We advised on the deal. We looked underneath it very closely. I learned more about fusion in about 6 weeks than in a lifetime. I said, thanks to AI and thanks to the incredible team we have. Shout out to Eric Bethke, our CTO. He was an aerospace engineer. He came with us to this. We used a lot of technology to power our understanding of this business. We were able to publish a really thoughtful research report. about this, and I was able to learn more about fusion in about 6 weeks than I learned about semiconductors in 6 years. So if you don't think AI is powerful, it is the most powerful tool on the planet to help people that know a little bit about something quickly know a lot about something. This could be investing, this could be AI, this could be semis, this could be fusion, this could be quantum. Don't underestimate the power of this technology to help take us as people to a whole nother level. It's incredible. But what a great honor. What a fun project. I got to say, Shay, you and I talk about themes and energy a little bit, but like this is going to increasingly be the determining factor of winning in AI is going to be powering. And this is another indicator to me that this is an all hands on deck moment. We do not have enough power. We cannot power the data centers we're building. But you saw the DOE news this week, all on this energy. It's because we all know, the bears can be as angry as they want to be about it. But if we have insatiable demand for compute, we have to have enough power. And if we have both, AI is going to proliferate so quickly and so powerfully. It's going to add so much value to the economy. It's unfortunately just going to shred the shorts, though. Shorts are going to get burned down with it. Even if they have some short-term wins, long-term, they are, as the French would say, they're fucked.
I mean, no, it's a classic example. Like when I saw the announcement, when we talked about the announcement, I was like, this makes total sense because nuclear is the goalpost of what needs to be done, but the football field is pretty massive before we get into the red zone for nuclear. I'm saying this wearing my Rams hat, so I'm a football thing, but there is ways to get past that. Obviously solar, but that's not going to be the 24/7 solution we need. There is obviously every chip. It's honestly up to Jensen and NVIDIA maybe on every chip innovation. Like you can do more with less and the grid won't be as constrained. But that again, that's a lot of pressure to put on one company. Yes, I think NVIDIA can do it, but you just saw the delay that Blackwell had from Hopper. It's going to get it's more complicated than a lot of people anticipate that what Rubin's going to be after Blackwell and what the one after Rubin's going to be. So yes, that's a potential solution, but I really do think that alternative solutions for us to actually build up these data centers and have AI demand actually get filled, like fusion is one of those solutions. Like I think that you as well probably, but every time I go on media or interview a journalist, I feel like a broken record a bit because they always ask me what I anticipate 2026 to be like. And I'm just like, listen, there's two intersections that are happening right now in the AI economy. One, AI compute is exploding. Two, the hard physical limits of energy supply is going to start getting felt more and more. So those two forces are now colliding a bit more and more as time goes on, because spoiler alert, AI is insatiable. The demand is insatiable for AI, and inference is just starting to starting to scale up. So I think that you're going to start seeing a lot more policymakers, like hyperscalers, start grappling behind their closed doors on what to do to make AI not so compute constraints anymore, and also energy constraints. So like chips can scale up as many times as possible. Same with models. Is be built every single day, but like electricity, especially clean base load electricity, cannot be. There is a mismatch happening. So I think this is a classic example of more to come, and I think that's love to see Futurum kind of be intertwined with it right out the gates, especially with the AI lens. I think it's really great that AI is touching every part of the world. So if there is some kind of merger or acquisitions to be made, there probably isn't as many industry experts to talk about what the impacts will be in the AI lens than what Futurum is. So I think that was great to see that as well. And I know you had to fly out a bit for a short visit to make this deal happen, but yeah, happy to see it.
Yeah, I mean, I spent time with the CEOs, the board. Yesterday, I've spent time on numerous investor calls now. Again, it's so powerful. But again, power is the bottleneck. This is just one deal. And by the way, I love the fact that this is such a continuum. It's like not and or. It's not or. It's and. It's like people are like, oh, well, you know, fusion doesn't erode the bull case of CIFR or IREN or other near-term energy options. It doesn't suppress Vertiv or GE Verona or turbines. Like, we need to do all these things. Like, we need to solve long-term, you know. And it's like, again, you know, I think like on my tombstone, it will be like, here lies Dan, hates zero fucking sum, like hates people that talk about zero sum. Like, it's never black and white. And that's the stupidity. It doesn't deserve as much airtime as it gets. Like, you know, what's this week? Like, you know, Google's working on a project with PyTorch to be more friendly for TPU. So that basically developers can more easily write to TPUs. And it's like, oh, so right, this is this week's article about why NVIDIA is going to go to zero. And I mean, the alternative, it's like, oh, NVIDIA is going to acquire the company that, you know, that built Slurm. And so the orchestration layer of supercomputing and training workloads, now NVIDIA is going to dominate even more, and no one's going to ever be able to undo them. It's like these kinds of comments are so silly. They're ridiculous. They are so uninformed. By the way, I want to talk about something uninformed. Let's talk about this. OpenAI, Amazon, $10 billion investment. The entire internet blew up with memes of Amazon gives $10 billion to OpenAI so that OpenAI gives $10 billion back to Amazon. And I just want to talk about, you know, you were in strategy for a big corporate, not in tech, but you were in big corporate. But like when you are in corporate development strategy, corporate venture, like, do people really believe, like I get venture is like, you don't win every bet. Like, I 100% get that that's not the case when you're putting corporate venture in. Same with investments. But do you think that Google, you know, Microsoft, Intel, well, Intel is maybe, you know, no one's going to look, but NVIDIA, AMD, you know, do you think these companies have like unsophisticated, incapable, incompetent people on their corp dev team that are looking at venture? They're like, yeah, you know, let's incinerate a bunch of capital and invest in OpenAI. Like, do you think that, or do you think that they look at the math of 1-to-1 and they're like, oh, you mean if we put 10 billion in, we can get 10 billion in revenue back? That seems like a good use. Like a 1-to-1 is a good use of their spend. You know, I have to believe that somewhere in there, they're like, we're going to put 10 billion down, and then mark to market, we think this will be worth 3, 5, 10 times more in the next period of time. So their investment is going to, you know, is creating capital growth, meaningful capital growth for risk. And do you think that they probably also have a mandate when they do invest in companies, tech companies, when they invest in companies, that they're like, we want to invest in companies that would benefit from the utilization of the technologies that we have to offer. Like, we're not going to just invest in things that wouldn't benefit from Amazon or anything we build here. It seems like they would want to probably apply their capital. So same with NVIDIA. Like, NVIDIA's like, yeah, we don't want to, we're going to invest in companies that don't need AI. Like, that's a great idea. We're going to invest in yogurt shops. We're going to invest in, you know, backyard playground building companies. Like, what do you want them to invest their money? What do people want them to do? Like, do you want them to pick companies that have no benefit from using their advanced technology? No, of course you want them to use advanced technologies from these companies. And ideally, if that $10 billion turns into a company that's now worth 5 times more in the future, they're going to buy a shitload more of the stuff that they were supplied as part of that first deal. This is a level of insanity and stupidity that knows no bounds. And these people are so angry. And I think I've got a, you know, this is worth clipping, but I think I've got a thesis. Do you think that AI doubters are the people that are also sitting at home feeling dejected and feeling to some extent that this is the end for them? Like, they're fighting so hard that, like, whatever their career is, they're looking at, like, my task is being replaced by AI, therefore I hate AI. Or like, what is it? Because, like, I just told you, like, I got a 4-year degree in physics in like 4 weeks, 6 weeks, using AI along with a couple of smart people and tools that I'd spent half a decade to learn the same amount about semis. Like, why is this a bad thing? Like, I just, Shay, cannot make sense of this. It's boundless. You know, I want boundless energy, but instead what we're getting is X filled with boundless stupidity.
Well, it's because everyone loves being in their comfort circle. Once you see something revolutionary that's going to make that line in that circle kind of squiver, they instantly get into defense mode, psychological like war in a way that if you don't know how to capitalize on this moment, you become more fearful and just like spiteful, to be honest. And going back on those boardroom conversations, I do think I'm curious on your input on this. I do think the conversations entering 2026 are drastically different than 2025 for a lot of these hyperscaler names. Same with AI data center names, because like, again, I'm more than just a perma bull, in my opinion, AI bull. Like I really do believe I know how insatiable it is, how permanent it's going to be. So I have a high floor of safety in a way of buying macro driven dips on a theme that people are trying to shake a lot of people out in. But those conversations, those boardrooms, I do think it's going to be a lot more about ROIC. I think we're kind of entering that period in this cycle, which I think is very healthy, where they ask themselves, like, which deployments are actually going to be driving real productivity gains and revenue, while which are just still experimental, and which does the market not really know, which are still experimental. And then also the market's looking for answers on which categories are actually going to convert capital into profits the fastest. So I think that you're seeing that the bond markets, the credit markets are obviously punishing any company associated with Sam Altman, because there is obviously a risk factor. Like, it doesn't matter if you're bullish on AI, there could be an agent of chaos into the AI ecosystem. There could be a poison pill. Doesn't mean you're bearish on the whole ecosystem. You might be bearish on this one agent in that ecosystem. So you're seeing right now the market kind of punish the names that are involved the most with OpenAI, CoreWeave, Oracle. Those are two names in the market that's the most exposed to Sam Altman's aggressiveness on spending $1.4 trillion. And they've been punished the past 1 to 2 months. Ever since that interview that Sam had, where he wasn't humble at all. He showed a little arrogance. It was a local top in a way. But I do think that you're seeing signs of these companies, CEOs, kind of want to diversify themselves away from that open AI narrative. That's why you saw Jensen. Jensen has his thumb on a nail on the AI economy. He runs it at this point. I don't care who says what. He is the principal of the AI economy. He sees that. And what does he do? Anthropic deals. Diversify our compute elsewhere. And then you saw Sam respond with what he did with, all right, TPUs, we'll get TPUs. Like, it's fine. Demand is incremental. It's not substitute. That's what Dana was trying to get at earlier. It's not zero sum. Every demand story you see, it's just an added layer. It's not replacing anything. But I do think going forward, you're going to see a lot more layers of clarity by these hyperscalers on what their ROIC is going to be. And you're going to see the first name that does that is going to be Google, because they have the best economics right now on their TPUs, their Gemini model, like how much compute is actually required for their Gemini model. Like, they are the best AI economics in the whole game. I don't know how permanent it's going to be, but as of right now, they are capitalizing on the delayed Blackwell chip moments where, listen, we trained our Gemini 3 on Trainium, on TPUs, and we are ahead of everyone else because they don't have Blackwell running yet. We'll see what happens once Blackwell gets up and running in the XAI data center space. Coliseum. I think Colossus. Yeah, I like to call it Coliseum. But do you know when that is going to be up and running? I know it's supposed to be Q2 of next year, but that's when like NVIDIA gets the first signs on what they need to fix in the Blackwell when it's up and running. Do you know when that period is?
You don't think it up and running in the Azure counts?
Not as much as like the massive data center. Like what XAI is doing. I think that's like the big gut check of like at that scale, hundreds of thousands. I think that you can really see like what's needs to be fixed or fine-tuned a bit.
Yeah, I mean, I think it's being iterated on very quickly. Every delay story I've heard about NVIDIA has been over-exaggerated just so far.
Okay,
So
that's reassuring because I think
and
that's
by, and by the way, though, what's also super interesting is, let's talk about something else that's very interesting is what are we doing about this kind of chaotic cycle right now where we share news that isn't really accurate? It spreads like wildfire. It brings down the market. And then these companies come out and refute. Like,
you mean the information is only one source who does that.
well, they're the most common, but I mean, they definitely seem to be, but it's like we're like the batting average is getting super high now of like this kind of every week there's a story.
Mm-hmm.
And then, it's like a bring the end of something. Oracle's been absolutely on the wrong side of it now for a while. But like, I don't even know, because here's the thing is like, I keep saying at some point in the future, like the turkey's going to come home to roost here. Like it's either the companies are just lying. And then again, you and I will look really stupid down the line that we just defended it, or the media is lying. And that's really hard to go. That's a really hard topic to broach because you really want to believe the media is not lying. You want to believe the media is doing its job. But like every week it's, so.
Well, you know what I think it's more stretching the truth. Like that Oracle comments that the $10 billion the Blue Owl was backing out. Okay, there's a nuance to that. Blue Owl is also backing CoreWeave's expansion. So maybe they don't want to be so overly exposed to Oracle and CoreWeave because, again, poison pill Sam Altman. That's the reason. But guess what?
Then I also heard that, like Oracle
Blackstone
Oracle got a different investor.
Yeah, Blackstone, I think was. So, like, again, like that gets left out, but everyone sees the one pocket of truth that really isn't the full truth. And that's what's been happening a bit, in my opinion, right now, because everyone's just eager to call it an AI bubble because we have some prominent figures kind of put their faces on it, like Michael Berry. There's another one I forgot that put his face on it that sold out and stuff. But I just think it's becoming a lot more popular, so people are just really eager to jump the gun. But there's so many layers behind this, like just that Blue Owl article. If you probably would have no idea they're also major backers of CoreWeave, and there's probably a risk factor on why you can't be so exposed to OpenAI. That's the only reason. Not AI demand is diminishing.
I mean, that's a perfect segue, though, is like, look, I had a fun debate about OpenAI. Like, I can get to a belief where OpenAI has risk. Mm-hmm. And here's the thing is like, OpenAI has no moat. Like, I don't know what OpenAI's moat is right now. It's a huge user base that would have to choose to defect and spend their money elsewhere. That's the biggest moat I can think of. As models continue to do the leapfrogging and the parity thing, and people can bounce it to model. But like the demand doesn't wane even if the model selection changes. It just puts different constraint on different compute, meaning like, okay, I've left 5.2 and now I'm doing Gemini 3 or I'm doing 4.5 Opus, or I picked a new model and I'm using that. So if all those people defect, that same compute will be consumed. It'll just be consumed elsewhere. But like my big thing is like OpenAI in this $830 billion round, like this is really interesting to me. And not because, like I said, clearly these smart investors believe in that there's a return. But the contradictory or the sort of the contrary opinion here could be maybe they just believe there's a massive retail liquidity exit and they don't care. I mean, there is a possibility that is what they're thinking. Is like, look, it'll do a 1.5 trillion IPO. I'll get in at 800. We'll double our money. We'll get it. And we'll that's what I'm saying is like, that is a possibility that they're thinking that way. Because I do think that there's enough liquidity in the market and enough retail demand that I think OpenAI will probably do great. Having said that, like we build our own AI platform, and all of our tools that we use AI for have model variety. Like I can bounce between Anthropic models and Gemini models and ChatGPT models. And I think language itself is not that much of a moat, just like image is not that much of a moat. And so you look at like, this is where Google's full stack becomes super powerful. And I keep saying like, I think OpenAI's fallback strategy is Microsoft. I think in the end is if OpenAI collapses, Microsoft absorbs it. And I think this is what happens is because Microsoft needs OpenAI to actually be able to compete with Google full stack. Is that it's basically Microsoft plus OpenAI is Google. And so interestingly enough, like I do see some risk for OpenAI, but then like even like Oracle, I don't see risk because all the data centers they build will be consumed by whoever that demand went to, because we still need all that compute. And even CoreWeave, like CoreWeave, I've called out and said, look, it's more of a house of cards because of the depreciation and the debt, the way they're using debt, like, and depreciating their assets the way they are, that they need growth. Like they literally are, you know, philosophically speaking, the way it is running, people, the reason I say it's like a Ponzi scheme is because as long as revenue keeps growing, they can keep funding those past obligations. Yeah. If revenue stops growing, their debt is going to be in trouble. And so CoreWeave's a little more risky, but even still, as long as the thesis is there that this demand will be consumed, even CoreWeave's sort of crazy all-in approach will work. It'll only stop working when growth stops happening. And there is no foreseeable future where AI growth slows. So it's an interesting set of circumstances out there where like OpenAI could be a bit of the canary in the coal mine for itself, but not for like they're the only one in the coal mine. They're alone. They're the N of one in the coal mine. And yes, it could blow up because Gemini and Anthropic and you know, DeepSeek or Meta AI or something else could end up. XAI could take a lot of demand, but the overall demand for AI doesn't actually erode. It only goes up.
So then, question: I agree with everything you're saying about OpenAI. I feel like it's not the cleanest money that's participating in these up rounds that OpenAI is doing at 800 billion. Like by cleanest money, I think there's probably a lot of sovereign spend funds that are participating in it. Who they might be shorts, that might be dumping it, being the first ones to dump it once the IPO window is closed. Type of investors. Let's just say that. I agree with that sentiment. I also think that there's an interesting angle here where valuation is not being factored. Obviously, when OpenAI is going for 850 bill. Palantir, I actually think Palantir could be a $1 trillion company if it wasn't public at this point. The way that OpenAI is getting valued at, because Palantir has a freaking moat. They are the picks and shovels of these LLM arms race. Like there's not actual all the actual insight you get from these models. Doesn't matter who wins in the model race. You need Palantir's ontology to essentially make those insights work. So like they are the picks and shovels play of that whole space. So like what is surprising for me, yes, I totally get the Palantir's really expensive. I'm not saying it's not. It's the priciest company in the public markets. But if you see Anthropic and OpenAI continue getting these up rounds like every other month, wouldn't you anticipate that the picks and shovels of all that race, also their valuation gets bumped up a bit because of that? I think so. That's why I wouldn't be surprised if OpenAI gets a $1.5 trillion valuation and IPO, or Anthropic gets, I don't know, maybe even $1 trillion. Who knows? Like, I don't think they will, but maybe, you never know. Does it make sense that Palantir is a $400 billion company then? It doesn't to me at all. I think it's like a weird stage 2 AI winners. By stage 2, I mean the application winners of AI. That's what's happening right now. The OpenAI, Anthropic, Palantir, these are the stage 2 winners. So that is where the hidden gems, the applications built on top of the infrastructure, has always been where the biggest returns on investment have been in any revolution. Google, Amazon during the internet era, it wasn't the Verizons, it wasn't the Ciscos, it wasn't the companies building the structural arteries of that era. It was the online marketplaces that are built on top of that. So the stage 2 winners, like the Anthropics, OpenAI, Palantirs, those are the applications built on the structural arteries of AI infrastructure. So like these are why these valuations are becoming pretty insane, but there's never been an insatiable, this big of a pie before to go after in a revolution. So that's what's happening. But I don't know, Palantir, I really do think that Palantir is kind of going to get re-rated with these hot IPOs. Like it just, especially when you see what's under the hood in OpenAI, like we don't even know what the margin profile is. Spoiler alert, it's probably disgusting. We don't even know like all those nitty gritties that the shareholders care about when they are a publicly traded company. Once we get that visibility, I do think there's a new benchmark now on nosebleed valuation on stage 2 AI winners that maybe Palantir catches a bit from that. So that's something what's your take on that? Do you think it's just totally separate and I'm just a Palantir Gaga shareholder that's just like trying to maybe see something that really isn't there, or does it sound like sound like knowledge?
Look, I think what I believe fundamentally is that enterprise AI and physical AI are the inflection of AI. So I've said this a lot. I wrote a Forbes op-ed on this. I've tweeted this out a few times. LLMs are a parlor trick. LLMs are the Netflix shipping DVD moment, and where people thought that was disruptive. Now, you were probably like a little kid when this happened, but like when Netflix started, like it was literally like super cool. Like, oh my God, we don't have to go to Blockbuster anymore. And I thought that was the disruption. And the average person thought that that was the disruption that we were experiencing. That was not the disruption we were experiencing. While we were all kind of looking over here at the, oh my gosh, they're shipping DVDs. And guess what happened? Blockbuster Video started a DVD shipping business. Okay. Mm-hmm. Guess who else? Hollywood Video, another big video chain at the time, started a shipping business. So they had stores all over. They started shipping DVDs. They're like, okay, problem solved. You've heard the story about how Blockbuster could have bought Netflix for like $50 million.
Yeah.
At the time. So the rest of the story is, while everyone was looking over here at the DVDs, the parlor trick, right? The sleight of hand. And Netflix was building the rails of streaming. They were building the future of how people would actually consume content, which was not going to a video store, and it wasn't going to your mailbox and getting a DVD out. It was literally on demand. Every device, every movie, every piece of content in the world would become at our disposal, which now is the new paradigm, right? This is how we consume content. That's AI. Like LLMs are going to be infused in everything that we do. It's going to be infused in the way we interact with every product, every chatbot, every agent, every enterprise workflow, and every tool, every physical AI, every humanoid robot, every automobile or transportation machine that we move with will have AI infused. It will have language models. It will have proprietary industry models. It will have video models. It will have whatever it is. And so the consumption of these things, it's the trillions of tokens, right, are going to come at scale. So the point is like when you have military applications like something like a Palantir has, right, and you have the ability to be monitoring data and then acting on data and getting insights from data and creating tokens from that data, it is going to be pervasive. It is going to be creating trillions and trillions of tokens at any given time that are going to be used to feed new intelligence. It's going to then create more intelligence and more tokens. So people are just not really up to what's going on here. They think LLMs are the TAM of AI. How much Anthropic can do, how much OpenAI can do. The reason OpenAI doesn't have a moat is because once you infuse the language model into the tool, into some semantic layer where you interact with it and it just does everything across all your tools, all your applications, and it's just navigating across all these things, the amount of volume of AI that gets consumed is going to be massive. Who builds that semantic layer? Does it start with Apple, who's basically skipped AI for a year? Does it start with Google? Does it start with Microsoft? But that is where ultimately most of the winner takes most comes from. So,
well, do you think so that's kind of going into my specific area where I've been like building up my positions for 2026, because I do believe what you're saying essentially that these where all the attention is right now is becoming more of a commodity of a space. And they're going to, the innovation windows of each model is kind of diminishing just because there's just only so much they can actually innovate at this stage. I do believe that the biggest winners next year will be at the stage that AI is in. It's going to be who owns the biggest distribution network to monetize AI. So what I mean by that is like the Metas of the world. Like they have 3 of the top 6 apps in the whole world is owned by Meta. They can monetize eyeballs like nobody else can monetize eyeballs like Meta can. They have a monetization tail that they know they can go after once they get all the compute required. That's why they're overspending in 2025. Justified. I want them to do that because they have 3 of those top 6 apps in the world. Like they're going to be able to monetize like no other in that arena. Google, like we don't have to talk about Google too much because that's been our baby, but like no one has bigger distribution than Google in the daily workspace. Google Calendar, Google Maps, Gmail, not even including Google Search in that, but you can Google Search, YouTube, Android, like the list goes on. Like that is a distribution network that nobody else can compete with. Guess what they can do? They can monetize AI through tokenization with that network that nobody else can compete with. You're also going to see like Mercado Libre. That's like my transition I want to talk about. This is my new number 1 position, Mercado Libre. Yeah, it is. If you don't know about Mercado Libre, it is You should look it up. In my opinion, actually,
like
it
the
might be
Amazon of South America. It's like
it's the Amazon, PayPal, and DoorDash of South America. If you want to think about that way,
it doesn't have the cloud though, right? They're not doing a
AWS. They use AWS for their cloud, which is I love that. But I wish there was something that they would invest in. But that's also not their arena. Like this is a company that a lot of people know C Limited as the Amazon of Southeast Asia. C Limited and Mercado Libre get compared with each other all the time because when you are the biggest Amazons of your regions outside of North America, outside of US, you get compared with one another. C Limited made the strategy of, all right, well, we want to become bigger than what we are with this region back in 2020, 2021, when money was free and the growth was insane. So they tried to grow in Latin America, try to grow in Europe. All that kind of became, the Europe one was a total bust. They wasted so much capital. And at the same time when they did that, they opened the door to Alibaba, Pinduoduo to kind of start getting into their Southeast Asia arena. Now they have competitors, those companies, where if they went the Mercado Libre route, where Mercado Libre did not try to grow outside of Latin America, they're like, this is an area in the world that has a massive, massive secular runway that if we just own and create this defensible moats, continue to invest in logistics and the infrastructure where it doesn't matter how big of a company you are, you can't come into our region without a multiple years of heavy investment just to compete with a fraction of what we've been doing for decades. That's what Mercado Libre has been doing for a long, long time, where they are the Latin American operating system for commerce via Mercado Pago, logistics, credit cards, like the ads business is just getting started. They are just, if you live in that area, you know about Mercado Libre. And what I was getting at is if you own an ecosystem or a distribution network that nobody else can compete with, you're going to be able to monetize AI via margin expansion on your retail logistics, via your ad business into your e-commerce, via figuring out credit risks on your payment, their commerce side of the business. It's just so many levers to pull from AI if you have this distribution network. And Mercado Libre right now is the cheapest valuation it's been in over a decade. And I think they are getting penalized from the macro things that are happening in Argentina right now. However, I do believe that it's just that's clouding the density advantage that they have across their commerce and fintech that make them impossible to dislodge. I think they have a massive flywheel where the more GMV that you have in an e-commerce business means more credit underwriting data. That means more wallets they can issue. It means that more merchants they can lock in, which means more volume per fulfillment center. That means that's going to get better, which physical AI starts scaling up. And so the unit cost becomes cheaper and cheaper. So like this is one of those companies where historically they trade at around, let me look it up right now. They trade around 17 past 5 years, 17 times price to operating cash flow. Right now they are trading at 12 times. So they're undervalued right now, but just based on 5-year historical multiples. But then, all right, so maybe they're just like their revenue growth is decelerating, margins eroding. Listen, they're supposed to be growing. They're growing this year, 38% top line with 14% EBITDA margins. Next year, 29% top line, 15% EBITDA margins. That's pretty dominant to be trading at 13 times price to operating cash flow. If you want to use just EV to gross profit, they're trading at 8 times. Like this is a company that they're getting heavily discounted from what's happening in the macro. And also like I think emerging markets is going to be a very big area in 2026 from everything that's happening with QE, rates getting cuts, the dollar getting weaker. Like this is an area that is becoming not more of a tailwind, but when all these AI winners, they are expensive. So even this pullback, like 25% pullback doesn't make me want to pound the table and participate because they've run up so much. So where's the next leg of opportunity? I really do believe emerging markets will be just on the macro front, dollars getting weaker. And also the amount of digital products that are going to get created in the next 5 years from AI is severely underpriced right now. It's going to be 10x what the bullish estimates are. It's going to be so much easier for these underserved regions to create these digital products based on the AI tools that we have now and have AI agents advertise for them. And it just becomes a much more level playing field. So I think that Mercado Libre, it's my biggest position now. And I think this is a name that I will not be surprised it gets re-rated $3,000 a share. It's at 2,000 right now. And yes, 50% return on your investment in 2 years. Like, you might scoff at that, but listen, I strive for a 15% return every year. Yes, the portfolio has gone way bigger than that the past couple of years, but like, if you think 25% a year in return is that's pretty, you need a sober reminder of how difficult investing is, because that's pretty difficult. But yeah, I don't know, what's your takeaway on the distribution network being the new like kind of moat that gets re-rated in the markets next year, like the Metas, Amazons, Mercado Libres, the ones who can really monetize AI right off the gates?
Yeah, I mean, look, I don't know really anything about Mercado, so I don't have much of a thesis on that one. But I've consistently seen you deliver outsized returns, so I'll let your research do the talking there. I mean, I think consumption is behavioral, and I think the patterns of behavior of consumption, and I think there's a lot of evidence in our lives that we want to simplify how we consume. We want to simplify where we get our technology from. We want to simplify where we get our stuff from. We want to, the gravity of going to a single marketplace and being able to buy all the things we need is extremely attractive. And that is the thesis. The problem with like an Amazon and stuff is, outside of its cloud business, it's very expensive to operate. It's not playing a short game. It never has. It's playing this long game of basically dominating a market and basically, 30-minute deliveries and 1 hour delivery. You know what I mean? Like, that is so expensive to deploy. But you do think like AI and the autonomy layer, what that could do for that, when you don't need to have nearly as many people in your factories, you don't need to have nearly as many people driving your trucks and your cars. You can have drones and robots and autonomous vehicles. I mean, you can take so much cost out, drive up earnings. My only concern, like I said, with all this stuff is just, what do people do to pay for all this crap when there's no jobs left? Like, and I say that with a little bit of sarcasm, because I do think we will see jobs created, but like, I can see way more where jobs are going to be taken away than I can see where they're going to be created, especially task kind of jobs right now. So that's super interesting. But I mean, my net truth of it is like, anyway, I mean, the net truth is for me is like, marketplaces are the future. People want to simplify their patterns of behavior, and this enables everything. So I like it. It's not an investing theme for me. I'm not in that theme.
Yes, we'll see if I can convince you over time. But I do want to talk about our next topic, which is AI data centers. I think we have to talk about this because or GPU REITs.
By the way, was there a couple deals today?
Was there a couple deals today? I don't know. I've been
out. I mean, there was a deal this week, though. Didn't Hut 8 have a deal this week?
Yeah, with FluidStack. I mean, listen, this is actually a good segue that you talk about the deals this week, because I think people are confusing why the death of these AI data centers, and it's not going to continue going with these deal flow going forward, when that's just so ridiculous. Like, the surge in bond issuance makes perfect sense if you're a hyperscaler, if you look at how the AI infrastructure cycle is unfolding right now. Debt is the cheapest and cleanest way to finance any kind of infrastructure cycle this massive. Like, when we're talking multi-trillion dollars of TAM or spend in the next couple of years, like, debt is the cheapest and cleanest way to do that. So when you're at Amazon, Google, Meta, Microsoft, like, you can issue 10-year, 40-year paper at very low spreads, because the market views them as quasi utilities a bit right now, because there's so much enormous demand for these institutional buyers for this credit that equity would just be far more dilutive. I think cash flow doesn't matter. Like, these are the most profitable companies in the world. They don't have enough cash flow to fulfill the AI demand right now that's being pulled forward at such a massive clip that you just need more more AI buildouts. So I think that apologies. I think debt bridges today's CapEx with the monetization that ramps over the next 5 to 10 years. And I think that's totally healthy. And you're going to continue seeing that. And that's why these AI utility themes, the cybers of the world, ciphers of the world, the IRENs, the HUT we just got, you like the Wolf Speeds, like all these core weaves, like the companies issuing these debts have incredible balance sheets. They have predictable cloud revenue, which I think is really important to say as well. And they have a multi-year demand visibility from all these AI workloads. So, like, in other words, what I'm trying to say is, like, these are long duration utility-like projects backed by some of the best credits in the world. Like, some of these companies have better credits than nations. So, like, I think debt is just simply the right tool to cycle this big. And I think it's going to continue. And I think you're going to see the AI utility theme still be strong in 2026. Like, a lot of people are calling that this year was a top of, like, IREN, CIFR, all these names. Like, they're never going to, NBIS, they're never going to see the all-time highs again. I'm like, that's ridiculous, because the biggest threat right now in this hyperscaler race or AI arms race is you don't build capacity fast enough. Because if you lose this AI platform war, you're screwed. And capacity is the moat right now. So I think whoever can deliver computes, the power density, the cooling, all the low latency, like distribution, like all that jazz and data centers that you need to scale becomes the go-to in all these deals. And that's why you're going to see like more deals like we got this morning on HUD 8. Like, what's your takeaway on this, like, AI, GPU REIT deal? Like, do you think this year is the calling the top? It's never going to return to all-time highs?
No, I think that this is going to trade with the sort of overall, this is a momentum trade though, for sure. But again, this is an important moment for me to remind everybody out there that I am a long-term investor. I'm not when I pick companies, I pick them for the long term. So, you know, I've put my chips down. If I get out of a position, it's because I no longer believe in the position. I don't trade. I rarely pair. I generally hold my positions and add over time as as more capital becomes available to either new positions or the same positions. The reason I say that is, like, you know, since I've owned CIFR, it's gone from anywhere. I think I bought it in around 10 to 12 was where I bought in. I wasn't super early. I wasn't late. It's been all the way up into the mid 20s. It's gone all the way back to the 10s, and now it's like at 15 or 16 bucks. And like, I don't plan to sell it. So it's like people are like, "Oh, you're a bag holder. Oh, you're rich." Oh, it's like, I'm nothing. You know, I envision that company can easily be $50 or more per share in time again. But patience is the investment standard for me. So like, I probably won't even think about selling it for any time, any point in the near future, because I genuinely believe in the need for AI, the demand, the near-term power requirements. And in that case, in that particular case with CIFR, I believe in the fact that they have the flexibility to work across different infrastructure. So they have a bit more of a flexibility if it's not just NVIDIA, it could be TPUs. That's what a lot of people think about the HUD 8 deal, by the way, is that it's probably a TPU deal. And the bottom line, though, of it is, like, I like that. So that's not a negate on IREN. It's just, when you pick IREN, for instance, you have to be picking both the power requirement need and you're picking NVIDIA, which isn't a bad pick, but you just have to realize, and then you're actually picking them to take on other kind of capacity providers. So you're picking them, so for IREN to be successful, they have to compete not just with CIFR and HUD and Wi-Fi and these other companies. They also have to compete with CoreWeave and NBIS, because they are doing that part of the job too. And so it's just a different set of parameters to pick. But I mean, we do the channel check, Shay. I don't have any indication across anywhere in our channel check. You know, and by the way, we didn't talk about it, but look at Micron. Talk about the freaking moment. Micron had its NVIDIA moment this quarter.
57% gross margins. I never thought I'd see the day in memory.
And $5 billion beat on the guide.
Crazy.
Like a 50% beat, though. This isn't like this wasn't like their expectation was 100 and they're going to guide 105. Their expectation was like 8 and they guided like 13. It was like a huge delta in the guide, which to me is like, we have mission control, we have launch. And
Oh yeah.
I know we're at the end of the kind of heading towards the end of the show here, Shay. But speaking of mission control, we have launched. I want to give you a second to tout your book, but didn't Rocket Lab get like an $805 million deal today or something like that?
Biggest deal in company history. Like I said, the government, they want to deleverage themselves from one vendor. They're not going to stop buying from SpaceX, but they're going to start expanding their pie a bit. But yeah, oh my God, like 2020 space is going to be the theme of 2026. When you have the biggest IPO in history. By the way, before I get into this, we're spending the last 10 minutes of every stream kind of going the questions from you all. So like send your questions in the chats. We're going to try to get to as many as we can towards the end, but we already see a couple of them. So we'll get to them. But yeah, so do that as I talk about my space spiel. Listen, space is a multi-trillion-dollar economy that's happening next 10 years. Like when we're talking multi-trillion, it's really AI and space. And there's only so few players in that arena. And when you get the anchor of the whole ecosystem in SpaceX go public finally, when they don't need to, that's what the important factor is. Like they don't need to, they can always upsell, upraise, get all the cash they need in the private markets. They don't need to go public, but they're going to go just off of who knows what reason. Maybe he wants to beat Sam Altman being the first $1 trillion IPO, probably the case. But I just think that SpaceX is going to provide a lot of visibility in that whole industry. And you're going to now see what the cream of the crop, their fundamentals and benchmarks look like, that you can now compare. Okay, well, Rocket Lab should be priced at like this if SpaceX is that. So SpaceX being at $1.5 trillion, do you really not think that the second player in that whole economy should be valued at 50 billion? This is literally 3% of just the 3% of what SpaceX's total valuation is going to be for number two. Like, yes, probably higher if you're going to be honest. Like SpaceX is trading at 60 times 2026 price to sales. Rocket Lab's trading at 35 times. That, yeah, I don't know what the margin profile is, but there's going to be a re-rating.
Yeah, you can't compare a private market valuation though and a public market valuation. The way rounds are done, we're seeing that with OpenAI right now. OpenAI would have been brutalized in the public markets over the last 6 months.
Same with Databricks, by the way. Databricks is just Snowflake is this, Databricks is this. That's the private versus public.
Yeah. And, that shows a little bit of the game that's being played. But yeah, I mean, I'm not, like I said, I haven't really delved into the space economy. I just keep buying more SoFi. But, it's what I do.
That's what you do. So let's go to the first question. Let's do ARM. What are the thoughts about ARM? Because I think ARM it's an interesting name because obviously they have a massive moat in their CPU. They're the blueprint of the AI economy. A lot of people don't realize like they offer the maps essentially to make all these chips. Their CPU business is on fire. Obviously, everyone knows their CPU business, but they're trying to make a pivot. And when you try to make a pivot on something that like from being a blueprint or the Switzerland of the AI economy to now becoming a player, there's a digestion period because it's going to get somewhat messy. So I think right now what you're seeing in ARM is when you make that kind of huge pivot in business model, it's going to take some time. And I think there's some impatience now that's being factored into their stock. But you're very close with ARM and talk to Renee all the time. Like, what's your perspective on ARM?
Yeah, I think ARM's going to be great. I mean, look, right now, the hyperscalers have all leaned heavily into ARM. They, have doubled, tripled down on ARM. Their volume, you've heard AWS, more than half their new workloads, half their workloads are on Graviton ARM. That the G in GB and Grace Blackwell is Grace, which is an ARM part.
Yeah.
You can look at Axion, which is the Google part. You can look at Cobalt, which is the Microsoft part. So, the bigger question, though, is the exposure to AI. So they've done well with subsystem and customization. They've increased their royalty license models, and they're increased their profitability. But the big question is their entree into AI. And I think they are going to do something interesting there. I think that something with Stargate, I've said this for a long time, I'm on the record. I think ARM gets into helping with IP for AI chips, not just network chips, and because the DPUs, the custom, they're also doing that, but the actual XPUs, I think there's a play with ARM and XPUs as well. And I think that is where there's a really meaningful upside. I think people want more, instead of just being associated with the CPU part of the the CPU XPU stack. They want to be in the XPU game, and I think they're going to get there. I like the company, but I mean, again, not financial advice per se. Like it's priced expensive at times, in terms of it's had a very high multiple, but I think that's because it's growing and winning, and when you grow and win, you pay high multiples. So, but I'm looking for their big AI pivot. I think that's when they're going to get their next leg up. That's my prediction. Prediction.
Listen, I mean, I'm a big fan of ARM. It's on my watch list. I just don't feel the urgency yet. But I think I'm waiting as well to see that big moment. But next question I see is EOS Energy. I can probably take the lead on that one because that's been my baby. This is the name that I got in at the threes. When I got in, I was like, wow, if management truly delivers, I think this is going to be like the next ROC11 IonQ mover for me. What I mean by that is like going from $3 to $4 to like the 20s in pretty quick fashion. So if you guys don't know what EOS does, they're zinc-based storage. They're trying to commercialize a technology that is at the center of one of the largest industrial bottlenecks in the US since the AI demand is forcing every single utility you can think about rethink their architecture of their grid, because we're going to have a grid issue. Like we have a lukewarm issue right now. I think I'm anticipating end of 2027. Also, a lot of the research I'm reading is 27, 28 is where it's going to become pretty terminal, the grid issue, that we have to figure out some alternative solutions from that. So lithium is becoming more constrained because obviously you have the EVs, even though like the demand for EVs suck right now, they're going to probably continue sucking.
Ford, $20 billion write down for Ford on its EV project.
That's white flag. They're waving the white flag. The hybrid does the job. Like people don't commute.
So it's a winner takes all in EV, and Tesla's the winner.
So either way, though, like lithium is taking like a lot of the constraint because of that. There's also other issues with lithium. You can only have like short battery charge where you need extended ones. Either way, like if the US wants to meet the AI build out like the hyperscalers need and are talking about, they kind of need to be a long duration storage solution that is safe, grid compatible, which it is, made in the USA, which it is. American AI, that's huge for American AI, for Trump, this administration, and it's scalable. Zinc is one of the only chemistries that fit that profile. So that's a reason, like, I think the TAM is expanding faster than any of the cost curve can catch up for the utilities and data centers. And I think that you're seeing these deals kind of come through, signaling that utilities need more storage that does not depend solely on lithium or create fire spread concerns and like dense installations. Like I think the problem is very real, and there's very few winners that can solve that. And EOS is one of those winners, and it's American made. So I think that's pretty big. Let's see. Another one is Kraken Robotics. That is one name I do, once things quiet down next 2 weeks, I do want to look into it more. I don't love it's not in the US markets really. Have you heard of Kraken Robotics?
No, at all? I got nothing.
Yeah, I don't have much on that.
I'm going to do my best. I'm going to do my best impression of not being Kramer, and I'm not going to pretend to know something about a company I don't know anything about.
That's exactly what I'm just doing. I don't know anything about Kraken, so I need to do more research. I like it, but this space is pretty new and complicated, in my opinion. It's not as easy as people anticipate. But we're at the top of the hour, so we should probably leave more time for questions. This is our first exclusive on YouTube. I really hope it's very much more intimate. It's going widespread this weekend on X, so it's pretty cool that you guys are all seeing it firsthand, and then a day or two later 100,000 people are going to see it live. That's pretty cool. So let us know in the comments, what do you guys want us to do better next time? We really want to start
here, man. Come on, let's go.
Let's feed the machine. We are off next week. It's the holidays, Christmas.
Who wants to know what I'm eating?
High protein, no carbs.
I don't know. We'll see. Yeah, it's a lettuce burger. Yeah.
Knew it. Oh man.
Sorry, everybody's got to get to know us a little bit, right? How are we gonna make friends with the audience if we don't get to know us?
I have my little activated
I take peptides, and occasionally I'll mix in some meat, red meat.
So, I'm waiting for my peptides, so I need to get shredded like Daniel. So I'm waiting for my peptides to come in. It's the next thing, but yeah, happy holidays, everyone.
It also makes your hair fall out.
I have plenty.
Can you imagine you with no hair? God, you'd be ugly.
No, I'd be a Disney villain with this chin, with no hair, these eyebrows. I would be fully a Disney.
Yeah, you look like you're in Aladdin.
Yeah, it would just.
You're one of the bad guys in Aladdin.
The mean genie in Aladdin.
This is fun, though. This is fun. Yeah, sorry. I'll let you wrap up now. I keep interrupting.
Oh, no, it's all good. We're off next week. TBD in the week after that. I don't know what the timing is going to be with New Year's, but I do believe that this is the final week for a lot of people. I think they take the next 2 weeks off. So maybe next time we see you guys will be in 2026, but let us know anything you guys want us to do going forward, and happy holidays.